What if I told you you could get a copy of the Edgefinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edgefinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edgefinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. Hope you guys are all doing well. And kind of a crazy turn of events over the weekend, and another turn in regards to how the markets have opened up. Basically, over the weekend, the markets were pricing in the high probability that there would be some kind of positive resolution to the situation with the Strait of Hormuz, US, Iran, Israel, etc. And basically what we saw was kind of a reverse in regards to negotiations. Negotiations stalled. There was a stalemate. There was not a highly productive meeting, and the US and Israel and Iran stepped away from the table without getting a deal done. And the reason that that is so meaningful to markets is that the perception there is that escalation will continue. Now, we've seen oil jump over the into the Sunday market open. You can see here oil WTI trading at 103.6 or so. Gold is slightly lower here today. Silver slightly lower. The dollar slightly higher. But what you can see in the charts is, at least right now, everything has kind of gapped and then faded back the opposite direction. So like with the dollar, for example, you've had a gap higher and then a little bit of a fade here. If you take a look at US stocks, gap down and a fade to the upside. If you take a look at gold, same thing. Silver, same thing. And oil is the only one that's kind of up and holding those gains. Kind of an interesting start, and I guess that this is showing some signs of resiliency in the form of U.S. Risk assets. Well, risk assets globally, I should say, because you're kind of seeing this across most instruments. Interestingly, like international indices are all kind of doing the same thing. So, point being, it seems like maybe the market is thinking negotiations will resume rather than just a full-blown escalation. And this is definitely kind of not what I was expecting, and I think not what a lot of people were expecting. When you had that news break over the weekend, everyone kind of braced for impact. What is a gap, brother? Basically, when the market opens up, and it opens up significantly different than where it left off, right? Because the markets close on the weekend. So over the weekend, you had a gap to the upside for things like the US dollar, etc. We just walked through that. So basically, the question is now, what next, right? You had the de-escalation hopes get slashed, and now you have stocks down, but they're regaining strength, right? I think technicals are showing you something. Technicals are showing you, at least right now, that the market is very, very resilient. Again, basically, you had the gap down and immediately found buyers stepping in despite barely any movement from where we left off on Friday. Definitely not what, there's a lot of people who right on the open, they went long oil, they got short stock indices, thinking that this was going to be Armageddon on Monday morning. And it still could be, right? But at least what it seems to look like here is that, number one, price action is really, really reliable here in the sense that, or I should say resilient here, in the sense that, again, you are not seeing a gap down and follow through to the downside. That maybe tells you in the short run here that markets are optimistic that there may be a resumption or a return to the negotiation table. I kind of was thinking, and this is still what I think. I think what's probably going to happen is the classic kind of art of the deal strategy where you walk away from the negotiation table, make it seem like it's the end of days if you don't negotiate, and then, you know, the hope is that talks resume and with more urgency. And we'll see if something like that happens. I think the market is hopeful for that, and that may be why you are not seeing this big gap down and continue lower move today. I think if all hope was lost, if there was no expectation whatsoever that negotiations would resume and that things would be, a ceasefire might get extended, etc. If that was completely out of the window, then we'd probably see the stock market indices much lower. You'd probably see oil back towards those highs, right? You are seeing a gap up in oil. And while 8% up is a big move on oil, let's also recall that, you know, we've had days in oil where you're seeing 15% up days, right? You had that one gap open where it was 30% higher moments into the opening Sunday night open. The reason I'm pointing that out is that the market does not seem to fully believe that this is just all out war from here and all things are done, right? Markets are ignoring the narrative in favor of reality. And the thing is, right, there's a good chance that there is going to be some kind of negotiation resumption. Again, I think that the strategy by both sides is to play hardball and who blinks first, right? But I think both sides know, like, the worst case scenario for most parties involved is the worst case, right? Basically, like all out war. It means destruction for Iranian infrastructure, Iranian people. It means sky high oil prices, low approval ratings, etc., for the administration in the U.S. So it's a lose-lose, and I think both sides kind of know that. So it's a tricky circumstance, but I think the market is kind of smart in sensing out, all right, how real is this? How real is this? All right, all you know, all bets are off, and you know, the stock market is going to just completely fall apart from here. I just think the market's quite resilient here. Now, again, I kind of pointed out in my over the weekend videos that I've been looking for a pullback on this thing, and I think we still could get it. And I'll say this, if we do see follow through to downside, if you see the market panic for a day or two or a couple days, then I'll probably buy that dip, because I think that there is resolution coming. I think that, you know, again, in the darkest moment where it seems like, oh, you know, negotiations are gone, right? That's a lot of times where people get tricked into getting short, starting to bet against the market, etc. So my thought is, I'm watching to see if the market panics a little bit, and I'll probably buy the dip constructively. I'm doing a lot of that in my stock and options side of things, selling cash secured puts on stocks that I like, especially in the software world, because I think some of those are getting a little oversold and good valuation levels. Let's take a quick look at gold here this morning. So gold, following suit with the indices, has been trading very similarly to US indices recently. What we can see here for gold is, if you do actually bottom out and we start to move higher, this would yet again be another constructive higher low type thing for gold. Although if I'm taking a look at top setups today, see what kind of trade ideas we have currently forming on Edgefinder. Let's take a look at this. What we can see is gold is not on the list. US indices are not on the list. So we're getting some neutral readings in a lot of places. Let's see what we've got. So we've got Russell getting a bullish reading. Let's take a look at what the Russell's doing today. Russell is pulling back here a little bit. In fact, I need to change this this chart up a little bit, because we have now broken through resistance. I still like the 38.2. I'm just going to clear that level, even though that did hold as a really strong level of support. What I'm looking for here is some kind of rollover in the Russell that could be a possible area I look for a long trade on the Russell if you do get a rollover in the next couple of days. So I do like the Russell long. I like it off the daily chart quite a bit. This does seem like a structural for now. It seems like a bottom of the Russell. So we'll see if that can hold. Maybe a pullback into this 38.2% retracement before looking for a push back to those all-time highs. That would be my first inclination on that. We've got 20 minutes until the U.S. stock market opens up. One thing that's interesting is you've got the Dow Jones hurting a little bit more than the other ones this morning. I thought that was kind of interesting. Nasdaq holding up okay. Russell holding up okay, but it's really the Dow Jones. Maybe there's one stock that I'm not thinking of that is down significantly and weighing heavily on the Dow. The VIX is up here this morning, up 8.8%. So let's go back to our top setups page. Kiwi dollar is probably one of our strongest readings right now in regards to bearish setups. So let's see. Here it is, NZD USD. So I do like this one on the short side personally. If we get a rally up into this area here, this 58.50 level starts to look like an area where I could see some downside continuation in Kiwi dollar. I think the risk reward there looks attractive personally. So I'm going to watch this. We'll see. Are you still holding your GU short? I have not been short GU in a while, so no, I'm not. I shorted GU several times, but I'm not in any GU shorts for the last few weeks. Probably 2 or 3 weeks ago, I last had a short on Kiwi or pound dollar. I've been pretty neutral on the dollar, but specifically the Kiwi dollar looks a little bit weaker. Here's the DXY, so the dollar index. Now, if you trade gold or currency crosses with the dollar in it, then this might be useful to you. But I think that the dollar itself is kind of stuck in no man's land. Like we were in this really nice upward trend. I think from a technical basis, we've lost a little bit of that smooth as butter uptrend that we had for a little while. But let me see here. If we go asset scorecard and then US dollar. So let me see, US dollar here, getting a +3 score. Some institutional buying took place. Institutions have about 57% long exposure to the dollar, according to the Commitment of Traders report. Trend has flipped a little bit more to the downside. Seasonality is a little bit more bearish in the month of April. Okay, fair enough. Jobs market data still looks pretty healthy. Inflation looks a little sticky. Economic growth data looks decently okay. Fundamentals specifically look pretty good for the dollar index. So I would say I slightly lean more towards the bull case of the dollar, but that technical analysis kind of breakdown in the chart, especially at a higher time frame level of resistance, the weekly chart resistance level we've talked about for a while, I'm a little bit on pause. I'm just, neutral on the dollar for now. I'm going to keep an eye on it. I've had a lot of long dollar trades in the last few months that have worked really well. But I'm not going to push my luck. I'm going to wait for my system to go back into more of a strong, case for bullishness. Dollar index has rejected this area a couple different times. And again, we've traded our way up here very nicely from those lows. I think I got dollar bullish. I don't know exactly when, but I've traded a lot of NZD USD and GBP USD. And had some good success on the short side of these pairs. But what I'm looking for on dollar index would be some kind of a technical bounce here. Specifically, if we can get some higher lows forming again, then maybe we look at another stab at taking a breakout trade, looking for that 100.5 to break. But I don't know if it's going to do that. We'll see, right? Again, just going to take my profits on those and move on. It's been a good couple months on the dollar long side, but I trade my system. My system says neutral. So neutral on dollar for now. But specifically like NZD, right? If we take a look at the New Zealand dollar, right? Because when we talk currencies, it's not just about one currency, it's about comparing to the other. We can do a breakdown on the New Zealand dollar specifically. And we've had some data come in that's a little bit softer for New Zealand. GDP growth was softer than expected. Manufacturing PMIs softer than expected. Services PMI softer than expected. Retail sales were a little strong. Consumer confidence. And then if we take a look at producer price index, came in lower than expected. CPI, however, negates that with a higher than expected print. Unemployment rate in New Zealand, 5.4% compared to 5.3% expected. So that's going to be a little softer for New Zealand. Seasonality, a little bit softer for NZD. The trend, however, still kind of flipping bullish. So let's take a look at that NZD USD one more time here with that in mind. Now that we've taken a closer look at the individuals, both New Zealand dollar and US dollar. So kind of flagging that you are seeing a little bit of an uptick here in momentum to the upside for Kiwi dollar. You've had this very nice downward trend that seems to be showing signs of trying to break out. I think if you're a bull on this pair, you want to see this type of move, right? You want to see failure from the bears here, right? And if you are a bear on this, right, you probably want to obviously see this area hold. And the next leg lower would be, can you actually not only kind of kill this little bull trend that's trying to start here, which could turn into more, right? You want to see that get rolled over and turned back into kind of your bear territory. So for me on Kiwi dollar, I would be cautiously bearish. I wouldn't, it's not my favorite setup in the world, but because we kind of have slim pickings right now in regards to Edgefinder setups, I would keep my eye on it. But yes, Kiwi dollar specifically getting a -7 reading. So I'm preferential to shorts, and I've done pretty well on the short side of Kiwi dollar the last few months. So we'll see. See if we can find something, but not quite ready just yet. I'll watch it this week. The AUD NZD currency pair, this is Australia, which is one of the stronger currencies in Edgefinder right now versus New Zealand. I mean, this one is just trending to the upside. If I were looking for a trend following setup here, be looking for something like a pullback into this area. So not really urgent setup there. Pound Swiss, take a look at that. Pound Swiss, maybe a breakout here would be interesting. Retests of that area. What else looks good on this list? Not a whole lot, to be honest. I usually trade primarily USD currency crosses if I'm going to trade currencies. I do trade currencies, but they are a lesser focus than mine, than things like gold and Nasdaq, etc. So, I should take that back. I watch the dollar really close, and I trade, I trade dollar crosses often. I just typically like to stay within the dollar range rather than too many of the FX crosses, barring some yen pairs. I like some yen pairs. With that said, kind of a slim setup here. But again, this week we'll see. We have some producer price index data coming out. So we'll see if that can flip things around on things like the dollar. Producer price index last time around came in hotter than expected. Will we get a repeat of that function here and cause the dollar to stay strong in this category in inflation? Or if we got a softer than expected print, that could actually flip the fundamentals a little bit softer for dollar. But right now, what I'm seeing is, the economic data is one side. You still have the geopolitical stuff, right? So geopolitical stuff, if you think there's going to be a de-escalation event, if that takes place, then yes, dollar could actually roll over. Because I think dollar is simultaneously benefiting from a round of strong economic data as well as geopolitical tensions. But if we're losing the geopolitical story, then yeah, dollar may have room to move lower. What I mean by lose the geopolitical story is de-escalation. The chart is telling you that it typically, or it tends to favor dollar downside. If things improve in Iran and US relations, dollar likely comes down, and vice versa. What do you think about the blockade of the Hormuz Strait? It is an ongoing negotiation. I think it is a mistake to jump to the conclusion that we are just outright full escalation mode right now. And the market's telling you the same thing, right? If we were full blown, like, oh, it's, end of days, things are getting way, way worse, then Nasdaq would not be doing this today. Nasdaq would be much lower. So yes, it looked like over the weekend, oh my gosh, here we go again. But I think the market is smart and sniffing out that maybe this is a negotiation tactic. Maybe there's going to be a walk away and then come right back to the table and sort out some kind of deal. I think both sides are trying not to blink. I think both sides want a deal, and partially made evident by the fact that they negotiated all day long for like the entire weekend, right? So we'll see. I think the market is telling you, at least price action wise, a resolution is still possible. Otherwise, oil would be up 20%. Nasdaq would be down 3%, right? That would be telling you, okay, things are completely killed between the US and Iran. I don't think so right now. At least that's what the market's saying. Maybe the market's wrong. I've mentioned I'm buying dips if we get them, and we'll continue to watch this. Hey guys, Edgefinder is currently 40% off right now. We're doing our big sale of the year right now for our anniversary since launching the product April 2022. We launched the Edgefinder to the public and have made a series of continuous improvements to the product. This tool, what it does is it tracks a bunch of macroeconomic data, a bunch of institutional activity, as well as crowd sentiment data, technical trends, seasonality patterns, and so much more. And what it does is it scorecards all of it together and builds a report card for your favorite instruments, whether you trade gold, Nasdaq, currency crosses, the euro, dollar, etc. We also have a Forex scorecard if you're a Forex person. So you can select your favorite currency pair. Like, so for example, here's that AUD NZD, which is just a monster reading right now on Edgefinder. So this will, and it shows you the historical readings here as well. So, you know, Aussie Kiwi has been a bullish score all of March, etc. But you can see basically everything that you want to in regards to major economic releases. This stuff is tracking the non-farm payroll numbers. It's tracking the CPI data. And it's more importantly, summarizing all of it in an easy to use tool that you can monitor your favorite charts. If this is something that you're interested in getting access to, if you've watched my videos, my live streams, etc., or seen the various guests that come on the show here and host using Edgefinder, if you are a fan and want a copy of the tool, there is no better time than right now to take advantage of our huge discount that we're running on the tool. Additionally, if you need a payment plan to make that more accessible to your current budget, then here's how you can do so in a really easy way. Simply scan the QR code below my camera if you want details about how to explore the tool, what it offers, etc. But if you need to set up a payment plan or you want 45% off, an extra discount for stream viewers here with us during the stream live, we'll drop a link here in the live stream chat to where you can speak directly to a member of our support team about setting up access to Edgefinder or setting up a payment plan if that is something that you are interested in doing. So with that said, we'll also bring in Ivan to the conversation, and we'll see what he has to say about this move in markets here. And again, you can scan the QR code, click the link being dropped in the chat, whatever works easiest for you, and we can get that set up. Sorry, I think maybe our editor is getting coffee or something. Let me just drop the link. Boom. Chat here. Okay, there it is. Just click this link if you are interested in setting up a payment plan or if you need some information about the tool, etc. Our team can set you up there. Okay, we'll bring in Ivan and see what he has to say here about this crazy market. Hold on, I'm switching us around. And there he is. Hey, Ivan.
Hi.
Happy Monday. How are you?
As always, better than... well, I'm not as good as Nasdaq, though, am I?
Nasdaq's holding it together, and I was kind of going on a rant there about how this is sort of showing you the market does not believe that this is going to be escalation part 2. It seems like it's kind of fading that idea, even though, you know, over the weekend I had so many comments, people saying, you know, it's going to gap down, it's going to be horrible. It did gap down briefly, but at least now, I mean, stocks are barely lower on the day. Gold is a little bit lower. Oil is higher. Same with the dollar. Dollar moved higher and kind of fading. What is this telling you right now? What do you think?
Yeah. That one, they don't believe it. And 2, it's kind of normal, not normal, but it's kind of what I expect them to do. Especially when we saw the price action overnight where it didn't really continue to fall. So gap lower and then fall. Then, of course, we are in a full-blown crisis mode. But I guess I saw, at least over the weekend, that there was, well, I wouldn't say that, okay, is there that there are sliding, kind of wanting to negotiate, but not really, but they're like, it's like they're hard to get, kind of, because Iran wants not any guarantee that they don't attack them, and the US says, well, open the Strait of Hormuz then, but then they won't open it because they can potentially be attacked in the future. So it's like, just agree then. Like you're almost right. Just give them the reassurance, and we'll be okay. So, but the blockade, someone asking about that, and you answering that, I think that yes, it's a negotiation, but also I think that should actually be the chess play, the next chess play when Iran closes it. Okay, then US also closes it. Then we are both at the same place. That should have been anticipated from Iran.
Yeah, it does feel that way. It feels like it is another kind of effort to try and come to the table. I think you're right. It's kind of like a whoever blinks first loses type of thing. Both sides, I think, acknowledge that like they want something from the other, and they are not going to get it through just all-out conflict, most likely. And if they do get it that way, it's going to be painful, right? So if the U.S. tries to go full force in regards to no negotiations, more aggressive, it's going to come with big problems, like other issues. It's going to come with oil prices spiking because Iran is going to target energy facilities in other countries, and the U.S. is going to target energy facilities in Iran, and it's going to cause big economic damage that could send the globe into some kind of a recession. And at the same time, Iran doesn't want to get destroyed by the U.S. military. So it's like kind of a difficult stalemate right now. And it really does become who blinks first, because both sides want something out of the negotiations, and both sides seem pretty adamant about not giving up what the other wants. So it is it's tricky. It's hard to see a short resolution, but at least what it seems like is, I saw a quick note over the weekend that it was like, negotiations had stalled, and then that there was no final promising outcome, yet there's still expected to be continued conversations. Like, it's not like we're not talking to them ever again. Like, this is like there's still like we're going to keep talking, basically.
Yeah, that seems to be the take. I think it was Investing Live who made a take that, they're probably talking, or there's rumors that they're talking in the back channels without them being public. So I would assume. But then, question back then, what do you think could be the de-escalation point, or from here? Like, what could make it de-escalate from here?
Well, in terms of like the negotiations, Iran doesn't want to give up the nuclear stuff. The U.S. wants them to, and the U.S. also wants them to open the Strait of Hormuz. But Iran is like, we want ownership of the Strait of Hormuz. It's really definitely not my area of expertise to know how that negotiation will go. My thing is like, okay, how do we take that as traders and use that information? And the answer for me is that this kind of goes back to where we've been for a while, until you get some kind of optimistic, promising resolution, the market will remain in unknown uncertainty mode. That being said, I do think that the simple posturing from both sides, acknowledging they need to talk, the fact they talked all weekend, the wantingness to make some kind of a deal is there. I think that at some point that will resolve itself. And so I'm a buyer of dips. That's the way I would look at it. I think that leans a little bit more in terms of just solely the geopolitical aspect, dollar bearishness, stock market bullishness, Gold up, if that may also be something to watch too, is that if this thing rolls over or finishes up, the gold market may actually rebound as a safe haven. Also, the risk to interest rates getting cut, getting slashed. So that's my thought, is I think that the de-escalation trade is honestly the more likely scenario. But I still would wait for pullbacks personally. Like if we got, I was actually hoping today you'd get further downside in the Nasdaq, and I was going to buy it, but doesn't look like I'll get that chance today.
Since I'm the interviewer and you're the interviewee,
I know. I got to turn this around. What do you think?
Okay, I have one more question for you later. Then my question was like, what's the trigger point? What could trigger a de-escalation sense? I don't know. Also, I mean that Iran goes away from the nuclear demand, agrees to do the Strait of Hormuz with US, or more likely Oman. I think the other closest one, Oman, in collaboration, and not to take and agree to ceasefire and not to take any more toll for whatever, a week or 2 weeks or a month or so, like for them to start negotiations again. But then my mind, this is way out of my league and everything, but Suez charges and the Panama charges, and I feel like we have all agreed upon that happens, but which is also a man-made canal though. But I feel like that's where Iran is going to try to use against, and I'm like, I don't have any argument against it. I find it difficult to argue against it because there is other places in the world where that has actually happened. But the other side, there is the Fair Maritime Treaty, or what's in English, but that you have access to international waters everywhere in the world without restrictions. So I don't know, but I mean, a ceasefire, go away from the nuclear, or collaborate with them on the strait, and give up the nuclear material somehow, somewhere.
I think that's actually a really decent take. Like I think like maybe some kind of there are some solutions that I don't know exactly how it will fall. There are solutions that seem to make sense that would be advantageous to both sides to an extent. And I think cool heads will prevail and you'll find something like that. I think that's a good take. Honestly, I agree with that. That makes a lot of sense. Obviously, we don't know the future, but as traders, we're just trying to weigh possible outcomes. The other thing I would say is that, the U.S. blockade, if we're looking just purely at the pattern of Trump during these geopolitical events, it's sort of big, the big stick approach first, scare the opponent, and then very quickly be able to walk it away. And I think that that's probably going to happen as well. Some call it the taco trade, others call it negotiation. Doesn't really matter what you call it. But the point is, there is that desire for both sides to reach something, and I think they'll find it. I don't know when, and you may get some scares in the meantime. Maybe you get some sharp drops in the markets in the meantime. But personally, I think the risk reward, not the certainty, but the risk reward to buying those kinds of dips is attractive. The other way you could do that is if you're on the currency side, maybe that means selling dollar on rips against currencies that you like against it. If that's something that you're interested in. But that's, again, just the geopolitical side. I think that the dollar is not my favorite thing to play this on if I was trading currencies personally, because I think that some of the economic data for the dollar looks decently healthy. What do you think, Ivan? What in the currency world, what are you watching? You like euro dollar still? I know you've been playing euro dollar a little bit.
Yeah, I'm holding on for dear life. And when dear is dear. I'm in pound. And when I look at a 4 hour, I'm like, we haven't really turned around. I feel like we have been in. I feel like I've been in a tumble dryer of emotions, probably. But actually, we haven't actually broken out from the range even.
Yeah.
So I'm playing pound. I'm playing euro as a primary. I am careful about dollar yen. That is probably has more. As if dollar continues to be strong, that is probably the best move higher.
Yeah.
Because euro is very strong by itself. We had now the Hungarian election over the weekend that should, in my view, probably strengthen because they now become more pro-Europe instead of being pro-Russia. And you can give some more loans to Ukraine, but which is Kiwi. But I mean, euro dollar, pound dollar, I still have some, and I haven't got a new higher high yet on it. So I'm like, okay, we can chill. We can see how this one goes. I just hope it doesn't just go straight parabolic up to 137.5, which is like my mental target.
Sure. Yeah, makes sense. Well, Ivan, I'm going to leave you to it, give you a chance to go through some charts that you'd like to and share with the class whatever you would. If you guys are interested in exploring more content with Ivan, he does have his own YouTube channel. He also does private coaching if that's something that you're interested in, whether it's figuring out a better trading strategy that meets your criteria and or finding what is challenging you on the trading psychology side of things. Ivan does an excellent job working with traders on a one-to-one basis. If that's something that you're interested in, hit him up and maybe you can sort something out. Ivan, I'll leave you to it. Thanks very much for taking over the stream.
Thank you very much for having me.
See you, man.
See you. So next time, Nick, the question was, what is the backdrop of all of this? What happens to the US economy, European economy, British economy, New Zealand economy, Japan economy when this is all over and when this war is over? And that is the reason why we have the dollar strength. That's why we have, or the dollar weakness. Why we have the S&P 500 strength and the Nasdaq strength, is because we are looking into, at least for a period of time, if not, because core inflation hasn't seemed to be picking up. Since core, which is X food and X energy, is not picking up, then the general economy is kind of okay. But is that we can head into a more recessionary / lower interest rates if we get very quick flash spiking high inflation, which reduces the spending power, which in turn reduces growth and activity in the economy, which then is like we even have less growth than we already had less growth, then lower interest rate is what I'm talking about, a year out or so, because it has to first go higher inflation, then the growth has to be reduced, and then has to be posted, and the growth is generally 3 to 4 months late. So there was that. Trump agreed to all Iranian demands into initiate a ceasefire, then tried to swing the pendulum all the way back into his favor the first day of field damage apart. Marco here debunked that, and as far as I know, it's been debunked as Pakistan gave one version to the Americans and a different one to the Iranians. So it wasn't really the US agreed to something else than Iran. It was more they were given different documents adhering to their own however they wanted, and then they agreed on the ceasefire because it was adhering to their demands in the negotiations. And then when it was all kind of air out that it was actually not, then there was a reaction out of Iran because Israel kept bombing Lebanon, and Israel and US kept saying Lebanon wasn't part of the deal. But for the Iran resolution, that was a part of the deal. So you can say that what they agreed upon is probably what was not true for the other party, which is horrible negotiation management, I would argue, from allegedly the Pakistanis. If that is 100% true, I'm not too sure. But at the end of the day, I'm just a macro trader, not a negotiation expert. So dollar for me is bearish. We had a gap open. I was very surprised with the gap down on pound for some reason. But euro, Aussie, New Zealand had all gapped lower. Of course, dollar Swiss had a bit of a gap higher. I see this as a sell opportunity, though I am not trading I don't have any trades on this pair as of yet. I see this as I have to wait for this one to, well, first of all, there is that, and then there is that. So somewhere between here and there is potentially going to be a peak, and I don't know which one it's going to be. So I have resulted to say I want a new lower low. Show me the money. Show me that we're going to go lower, and I'll take it. And for Smith has been very strong as of recently. So it surprises me, not so much, but it still surprises me that we haven't gone much lower. But it seems that every time we do have dollar bearishness, it becomes very much stronger. I've also kind of, for myself on a 1 hour, said, okay, if this is kind of the decision box. Are we going to go higher? Are we going to go lower? We are currently in it, and we're waiting for it to make a reaction. It has tried 1, 2, 3, 4, 5 times. Tried to reject it twice or 3 times now, and it's kind of failing, but it's not over. We haven't really, and for that matter, we haven't really closed the gap. I am not a gap trader on dollar. As you can see here, we gapped previously, gone a bit higher, then lower. It doesn't really matter. We have a gap here to here. It doesn't really change anything. We haven't really tried to close it. We have attempted, but not really. And that's kind of the deal, is like for currency, as far as I see it, it doesn't really matter the gaps. It's more what is the driver, where are we going. So market right now is pricing in against better expertise that, we're going to go into de-escalation. It's going to be great. Somebody said it's about, when probably now is 18 minutes until the deadline for when they are going to close the Strait of Hormuz. Yeah, so that's only going to hurt China. So for me, China, India, was it Thailand and Vietnam or Philippines? Those 4 or so had been given oil from Iran through their own channels, and now US is stopping that. That's going to hurt China more than anything else, and for that matter, maybe also Australia, a bit of Australian dollar and New Zealand dollar. But the hopes that I see is that when the US now is putting hard against hard, they are able to create their own channel or clear if there is mines or not. It was just allegedly. But even if there is, they can clear the strait and then open it up, and then they become the living targets instead of the boats. But I think that that's kind of the way that this is going, where they are going to force it open. I would even say that's not even a NATO job to do, and to create peace between 2 countries. But it seems like, I see so far, that the dollar is having a bit of a bearish reaction to it, and doesn't really see the need. The other case here is, is that when we gapped open on market open, that was the pricing at the close of Strait. Now, if we were to continue higher on dollar, that would be because there would be deterioration over time, so that this escalation is going to have deteriorating for the world economy to come. And for some reason, that's not happening. Unknown. I guess it is because they want de-escalation, or that we have already a close strait. There isn't really a big new thing. It would have been an issue if this was the first thing that were to be happening in the war. A closing the strait has already been on since 28th of 2nd of March. So we have been at it for 1.5 months already. So market doesn't seem to be too bothered about it then, and doesn't see this that much of an escalation, rather than it had already happened. Euro has, in my eyes, paused. Had gone into a range. I don't know who said that. Somebody said that the market is going to go into a range until whatever. I can agree to that sentiment, that we are not really moving anywhere. We haven't really come down to search for lower prices, and we haven't really gone beyond. And I think that what is necessary is, of course, a ceasefire and a continuation of a ceasefire that we are going to see not only now, but moving forward. And until then, we are going to go range. or whatever this is, and it remains very elevated. I have been talking to some of you dollar bulls, and I can see where you're coming from. It's it's fun. It's not fun. It is the situation is that we have a closed strait. It is escalating, but the market, no matter what I say, what it should do or couldn't do or whatever, what the market is currently doing, it is not pricing in dollar bullish. Um, and there was a gap. There was something there. You're welcome. But then you trade continuation. I am, though I'm biased, I'm not convinced of a euro dollar lower until it shows me lower lows, especially with the gap open like that and a bullish price action, what generally tends to happen in the ideas in the times that I remember is that we continue higher after a gap like that because we already priced in the escalation. And to be too cynical to say, but it isn't much more than what we already have. The other question is, since we already have a close interest rate, shouldn't this just prolong and create more losses and more havoc and more inflation at higher oil prices? Yes. But then we still somehow believe that the negotiations are going to save us before that. As I've said, or I think I said it earlier, that oil going higher, gap up, we priced in the new higher high. Great, fantastic. If it is continuing to be bullish, let it show for me. I want to show me higher highs and higher lows. Market trying to go down to search for the gap and close the gap, to me, is weakness. Kind of like you're trying to hold the door open as wide as you can in a storm, and you're only able to get that much of a distance. The force that is upon you is much greater. So to me, to see that it's falling, or if it will fall, is absolutely a weakness. And then would be the case of, okay, can we turn around again and turn higher? But then again, we are in overall, remember, this is escalation. And then we had the ceasefire, and then we haven't really made a new high. Not that it can't, but just remember that the current ceasefire situation, the current negotiations, and the strait closing of the strait hasn't really parabolically sent oil, and that is a healthy sign per se, but it's definitely a sign of we're not going to die yet. So, trade setups. I want to buy euro yen. What was a bit wild yesterday, I think the price was here and then the spread was like up here. It was magnificent. The spread at open yesterday. It gapped lower and it went down to central pivot and everything else, but it is parabolic. And I remember I wanted an entry down here, and it didn't come down to my entry. And this is where I want to be in a trade. So does the gap have to be filled? It depends, Paul. And my answers for Forex, no. That's not necessarily, well, it's not really a health sign or an unhealthy sign. It's more like the fact. Has it been closed or it hasn't been closed? There's no magnetic to close it, or it's not what do you call it? There's no polarity to it. It's just fact that we have it closed. And what is the important driver here is actually, are we going to go, what is the driver of the market? Then we can close or we don't close. Or if we have, for that matter, driven the market lower into a target, into a range where we want to take profit, then profits is going to drive the price back up again. Not necessarily that the whole world has changed. I'm just double checking that. Why? Is nobody telling me? Did anyone tell me? Nobody told me? Is nothing has happened? Dollar is falling, but market is like, wow. Okay. I just see dollar weakness. So I don't know if somebody can check the. Okay, just got an error on financial juice. Oh, it's funny. Okay, cool. I don't know why it's falling, but fair enough. It's falling. I like it. I can like that. So yeah, euro dollar for me, new higher high. I want out of this range. Pound, I want out of the range. I want a new higher high, and I just had an epiphany when I was with Nick here. It is great. I mean, it's a range, and we haven't really. We're kind of in the starting point even. We are 120. Well, actually, quite a lot. 129 pips in. All right, cool. Let it turn around, turn higher, turn around, come back, and we continue. If we're going to 137.50, as I said, I mean, we have days left or weeks left. There is opportunities here. Just because we make a new higher high doesn't necessarily mean that that's the end of it, and it's just going to go straight up. But to me, it's all dangly. Dollar Swiss I touched a bit earlier. The strength in it is really interesting. That it's not strength, but strength anyways. I really want a new lower low, and for it to show me that we're going to go in that direction. Dollar CAD. I'm not going to tell you about dollar CAD. I can talk about the countries. I can talk about their economy, but trading wise, and in my opinion, I'd rather be an ice cream seller. I love ice cream. Than trading dollar CAD. I'll sell ice cream in Ontario in the middle of the winter. I'll sell it in the wettest, darkest winter. I'll sell ice cream, even to a polar bear, rather than you're forcing me to do this. But yeah, Australian dollar had a bit of a gap lower. And showing not as much strength and resilience as euro dollar and pound. I think that has to do with it was really strong, but I think it has to do with potentially it's going to have stronger headwinds with China. If so, not China getting enough oil from Iran and around the world. They are, in a recessionary situation. So them not getting the oil that they need, sending inflation higher, sending growth lower. It's the last thing they need. So probably, and again, new high. Show me the money. Show me where we're going. And that kind of leads me, but that kind of begs the question, where are we supposed to be entering? How are we supposed to be trading? How does you want to perform? Is there, and I hate to see it because I was looking to buy here, but it only made like a small little pullback and then it just rose. Now that's the difference between limit orders and market order and paying higher price for having a higher entry. But sometimes, not always, but sometimes there's a difference between you and 230 pips profit. So it left me. And right now, too high, too late, too gone. Let it run, let it rip, let it do whatever it wants to do. The gap open was fun overnight, but the spread was diabolical. My take on S&P 500 and Nasdaq and everything else is that I buy just generally first of the month or so, and first of the month was, where is it? There, somewhere there. Just generally, but it's been not so great fun lately because February 1st was quite high. Not really quite high. Somewhere there. 1st of January was fairly better there, but we have fallen something since then. That's about 9%. Not really that much of a pullback. I wanted rather 20 in this kind of scenario and craziness, but fair enough. So I'm like, okay, what do we do now? Do we wait for May? Do we just let April do what April does? April is actually one of the better months for S&P 500 as of generality. We have been in the low, and I'm looking for it to be bullish, but I just, as a technical trader, it just doesn't talk to me. Markets are buying these rumors for de-escalation. If we actually were to end the war, could see a spike up. Oh, thank you, Simon. Thank you. Europost says Iranian officials are studying abandoning uranium enrichment as U.S. conditions for ending the war. Classic buy the rumor, sell the news. Yeah, I 100% agree. 100% agree. But on the other side, we have also been selling the news as well, though. So now it's more like sell the news, buy the rumor. At least the downtrend of it, and then But for euro, it's been, what has it been? Sell the news, buy the rumor, kind of a thing. Yeah, just the opposite. But yeah, so buy the rumor, sell the news, 100%, and it's fun. But again, the New York Post tweet about Iranian officials, I would imagine it's not even official statements. So Iran can come out in 2 hours and be like, we haven't done anything like that. Who said it? A source. Hey, trust me, bro. Sources, trust me, bro. I hate it. I don't like it. Yeah, of course we're not going to make a higher high with, hey, trust me, bro. Somebody in Iran said it. Who? He is probably called what is a typical Iranian name? Abbas. Abbas did it. Abbas said it. So yeah, if I'm looking for your dollar to make a new high, that would be absolutely fantastic. If everything collapses, and even though, let's say, if everything collapses, which it already has had, euro dollar is still high. So I think what the market is doing, which I am leaning towards, is we are going to go higher on any de-escalation rumors, and then we are going to mute any escalation, because we haven't really broken out or whatsoever. If we had a full-blown war, I think we should be down here, but there was that. Did I cover New Zealand, new high, or all the way back down to 57.50? Aussie down to 50, down to 69, 20, 30, 40, or a new high, depending. Give it. Dollar yen. Yeah. You know what this looks like? This is like an emoji. This is like that emoji. But yeah, no. Just let it be. It's okay. It's all right. Aussie CAD. Another great trade. Still in it. Waiting for it to make up its mind, son. It had a really big gap in the open. Well, really big gap is emotional. I understand. I'm sorry. But it's 81 pips on what have we moved higher from? 180. So we moved from having almost 2% in profit to only 95. That's a 50 pip, 50% pullback. You see that on the trading account. So that is, rough, but I didn't buy because the spread was way too big. What was it on some pairs? Was it 80 pips on some pairs? 60, 30, 40, 80? It was it was beyond. So to me, it is what it is. Okay. So I'm waiting for your Euro CAD to turn higher, Euro dollar to turn higher, pound dollar to turn higher, New Zealand dollar to turn higher, dollar Swiss to turn lower. And until then, I can sleep on my nice rocks and snow. So I earlier today had a mentioned meeting inside Discord. I assume that you're all going to watch the recording because it was fantastic. Other than that fantastic meeting about US Trader, I absolutely love helping you guys out. That's what I do. That's why I'm here. It's to make you guys better traders. Had some meetings today, fantastic. Couldn't be happier with me or the meeting. Learned fantastically a lot, and of course, that's not what I said. That's what they said. So head over to my YouTube channel and find my contact if you need one-to-one, or if you just need to have someone to talk to. And in the meantime, I'm gonna enjoy my profits I've been given so far, and I'll see you next. Boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone had a fantastic weekend here. We got some news. We were supposed to have some negotiations with the US and Iran. It seems like we left with a little bit of nothing, but nonetheless, a full day worth of negotiations. And according to the New York Times, there is a possibility that Iranian officials are studying the abandonment of uranium, which Ivan went ahead and talked over. And I kind of agree with him there. I mean, according to who, that is a very bold claim, I would say. I think that's a really big reason as to why Iran does not want to give up, is they want to continue their uranium enrichment. So we'll go ahead and see. Supposedly, according to Financial Juice, there was some kind of reaction there. But again, just looking at the overall currency strength for the day, things are pretty flat, relative to the early morning. So as always, guys, go ahead and drop any comments, any chart markups that you want me to go over into the chat. I'll do my very best to go ahead and go over them. And without further ado, let's go ahead and get right into it. So what's up, Ivan, man? Hope you are good. Fantastic. I listened to a portion of your stream there. Good as always. The blockade supposed to have started now. There was actually a timer in Financial Juice here. So the blockade starts. It was kind of weird to see that kind of like, no, I'll do it. No, you do it. No, I'll do it. So we'll see how that plays out. But for the most part, we are seeing the market is trying to go ahead and force the idea of risk on. You guys said it in the chat earlier, buy the news, sell the news, or, buy the rumor, sell the news. So it seems to be like that is the case here. So let's go ahead and look at the Edgefinder for potential setups, because at the moment, I am desperately looking for some. So we can see here that just at the top of the list here, you're seeing Aussie Kiwi, which the Aussie dollar seems to be making a comeback. It was a little bit weak earlier, a couple of weeks ago. Actually, when the war started, it was very strong. The Aussie basket as a whole was very strong, and I essentially bought the Aussie basket, and it worked out really well. And then the Aussie dollar story started to fade off a little bit. But now we're starting to see some bullish readings when you're looking at Aussie Kiwi, Aussie CAD, Aussie Swiss. So that's really interesting to see. As I just look at the Aussie dollar, it seems to have held this level of support quite nicely here. So maybe I become open to the idea again of some kind of a pullback opportunity and buying that. I wouldn't mind that. In fact, I'll go ahead and put an alert here somewhere right here, and I'll be mindful of that. If we do flip risk on and there is some kind of a de-escalation, I do anticipate that the Aussie dollar tends to go ahead and shoot higher there. So maybe we can get a pullback. If not, I missed the trade. Maybe you'd play the instead. You would need to see some kind of a let me illustrate this for you guys. A break and retest of this overall level of resistance here that we're kind of playing within. So that's my thoughts on the Aussie dollar. But let's continue and go down the list. And again, guys, feel free to drop your comments, your chart markups there, and I'll go over and look at them to the best of my ability. Sluggy said, what are the chances that we end the war and see a blow off top before we drop hard? You know, that's definitely a possibility. Right now, it's really hard for me to make a directional call. I think that there's a lot of possibilities, but they also come with a lot of very specific scenarios. So yeah, I mean, definitely a possibility. Let's go ahead and look down the list, though. Let's see dollar index, which is essentially one of the main components as to what drives my directional bias here, is because most of the time I'm trading the dollar against something else, right? So dollar index is something I very much pay attention to. If I go to the Forex scorecard here, in fact, actually, it'll be under asset scorecard. And if you go to the US dollar, we seem to be getting a neutral rating of 4, very borderline of a bullish reading. So we do have inflation working in our favor, jobs market, economic growth. We did go ahead and miss that GDP figure, which I did not like. But the overall manufacturing is doing well, retail sales, consumer confidence, which is good. What's really hurting us here is the technical bias. You did get to see a big drop in the dollar index due partially to the fact that you did have that de-escalation in the Middle East, and markets flipped risk on there. So that's definitely hurting us there, and it's actually a meaningful hit too as well, because you had this very clean upward trend here, and now we basically took care of all of that here, most of it. But now we're sitting up against these very crucial, I would say, moving average. You have the 200-day here in yellow and the 50-day right above that there in red. So as now, that's acting as dynamic support. So we'll go ahead and see if that continues. If it is support, then perhaps the dollar index, just retraces a little bit and continues higher. Ultimately, though, I do think that there is a cap, whether it be 99.5 here, where you have this gap that we need to fill, or 100.5. Those are the two upside caps that I would have marked up on my chart if I were you. So right now I am positioned short Kiwi dollar, but again, directional bias is a little bit tricky. And I'm gonna talk on Kiwi dollar here shortly. But when it comes to profit taking and managing the position, when dollar index hits 99.5, I'm going to go ahead and look at evaluating that Kiwi dollar to see if I want to take it off the table or not. So yeah, dollar index still up in the air. If you were to get some kind of a re-escalation, which we kind of saw, right? We kind of saw that this weekend in terms of no deal happening. They were disappointed, and then the U.S. now blocking the Strait of Hormuz. Despite that, you are seeing dollar softer there. So to Ivan's point, it may seem like the markets are just completely ignoring that, and they're grasping for any chance of de-escalation that they can. So something to be mindful of when you're trading Forex there in the dollar, and as far as risk on, risk off. So yeah, and then as far as bearish readings here, not much going on. You do have the Kiwi dollar, which is bearish. The Kiwi dollar isolated is bearish, and then the New Zealand US dollar is a bearish read as well. So let's go ahead and talk about that one there. I am in the trade, pretty much break even for me. The reason why I got into the trade is because we basically have been trading within this range here. So 0.585 and 0.55500. Support resistance, very simple. That's how I like to keep it. And we were basically, during a couple days ago, we were basically trading between the middle of that range, no man's land. So I went to go ahead and short the Kiwi dollar because you had a strong, very bearish reading on the Edgefinder. I was waiting for a pullback. We got the pullback into this 200-day moving average, a 50-day moving average, and this level of resistance. So from a technical perspective, you do have those confluences. And so I took a stab at that. But again, remember, it's kind of tricky because if you do see some kind of a risk on moment again, then this thing will definitely go ahead and shoot higher. So there's basically two ways that this can play out. And this is very, very vanilla, very black and white. So if you're risk on, Kiwi dollar is most likely moving this way, and if it's risk off, Kiwi dollar is most likely moving this way. That's it. And if there's nothing going on, then maybe just flat. But ideally, if you get a big move in either direction, it's going to be due to the fact that there's risk on or risk off. I see some comments here in the chat, so let me go ahead and address those here. Hey, Alan, I think the markets have gotten clarity of the situation on the weekend, which marks a move from uncertainty to a bit of clarity, hence why the markets start becoming risk on. Yeah, I mean, there was definitely negotiations, right? They definitely went over there. Vice President Vance went over there and they talked, and they didn't come to an agreement, but they did have a full day worth of negotiations. So, there's definitely a chance that we're not seeing the full picture. And maybe they want to keep it that way until they can solidify some things. So yeah, I think that's why the markets are kind of grasping for the idea of a de-escalation, even though we didn't see anything formal in the tape in the news. Can you explain how is that the publication of economic indicators and news events fit perfectly into technical analysis, or is it an illusion due to post-analysis? No, man. So how do I trade off of economic indicators and news events? Sure. Markets trend, right? We all know that. We all know that the big moves happen after a news release. In fact, I just recorded a video about this over the weekend, and I'm going to publish it this weekend. Basically, how do you trade the news, right? So markets react to the news because of the expectation versus reality versus what's priced in, right? So let's go ahead and talk about this. The overall move in an asset class is not because of because it came in higher or lower. It's not that simple. If it was that simple, we would all be millionaires, right? Basically, think of it like this. When you're playing a video game and you have a character, right? And let's say that the character has, your speed, your defense, and power, right? And they're all at certain levels, right? Like this is speed at the top, the speed, power, and then we have defense, right? The market, the different economies let's talk about the U.S. here. The U.S. has a certain profile right now. Growth is at a certain level, inflation's at a certain level, the job market's at a certain level. So that's what the market's playing with right now. Every time you get a new data release, it affects the overall level of the current market. So let's say speed is going to be growth. This is the growth section. So speed equals growth, and you get retail sales. And let's say that, we can see here, obviously, that speed is somewhat strong and you get a pretty good retail sales number. That's not really going to affect it too much, right? But let's go ahead and say instead that you have speed, which is growth, and it is a very, very weak portion of the U.S. market's economy. So speed is low, and let's say you get a miss in GDP. Well, that's going to bring it down even lower. And so that's going to definitely move the markets. I hope that was somewhat understandable. But essentially, the market has a profile, and depending on the new data sets that are incoming, it's going to affect the overall profile. And every economy has a different profile, a very unique profile. So to answer your question as to how do you trade that and how do you take actionable steps about that, I revert to the Edgefinder. So like I said, every single country has a very unique profile. In fact, if I go to Eco Surprise Index here, you can see how different economies are reacting to data releases. Some, like the US, is somewhat stronger at 55%, meaning that 55% of recent data releases have been beating expectations, versus something like the Kiwi dollar, where 29% of those are coming out bad, like it's majority bad. So each different economy has a very unique situation going on for it. And so the Edgefinder basically takes in all of the new data points as they're coming in real time, and it's automatically comparing it against everyone's profile. And so that's why you can spot things like where the US is doing relatively good versus the Kiwi is doing relatively bad. And so you want to get those polarized relationships there, where one's really, really good and really, really bad. And in currency world, that is where you get the best trading opportunities. When you're trading something that's really good against something that's also really good, the movement's not going to be that good, right? It's going to be flat for the most part. And so this tool does a really good, job at finding those opportunities. And then you can isolate them. So you can go here, and if you want to take away the neutral readings, there you go. And then that way you kind of narrow down the list there, and you pick whichever fits your toolbox, right? I'm a Forex trader, so I like New Zealand dollar. The Aussie pairs are looking good. If you're an equity trader, indexes, maybe the UK 100 is something that you look at, right? The UK 100. So that's basically how I use the Edgefinder and how I use news to trade that. Marco, how are you doing, my friend?
Hello, I've been pretty well. What about you? Did you have a good weekend?
I did have a good weekend, yeah.
Awesome. Did you see the latest news?
Seems like we're the ones in charge of the straight up. Supposedly now we're blocking it, but I don't know.
No, the latest one was this one. So Iranian
the
officials.
enrichment.
Yep. Quite a big reaction. Pretty unexpected, if I'm being honest. I mean, they're just considering it. It's not like they have committed to anything. So, but the markets are loving it. The weirdest part about it is the stock market just keeps on going up. So we had the gap down. I think everyone is asking, how can the stock market keep going up? And apparently, like Brent Donnelly mentioned in his latest newsletter, that when everyone is saying, how the hell can something go up or down, usually it just continues doing that same thing. So stocks seem to be catching a bit, and they don't seem to be stopping, even for the negotiations breaking down.
I mean, it's basically by the rumor selling news. That's essentially what it is. The rumor being that there's talks going on, and that a ceasefire or a deal is on the horizon. I think markets are just grasping for that idea, and unless they're disappointed, then that's going to be the path of the resistance. The only thing that gets kind of annoying and kind of tricky here is that if this thing continues to grind higher on those expectations, and you get some kind of a disappointment, the reaction could be very, very drastic to the downside. So for those that are, trying to be optimistic here, and I'm part of that crew that's looking to buy equities here, I wouldn't buy without being patient. I would need to see some kind of a pullback into a meaningful level, because the possibility of a disappointment is definitely possible, and you can definitely get hurt by just chasing price without any pullback.
Yeah. But it's just weird that the stock market does not seem to care much about the deal falling through. But what's your take on it? Do you think this is just a small hiccup before we fully flip to risk on? Because Iran and the US are talking, and we're starting to get better news than we did, let's say, 2 weeks ago. So do you kind of believe in the whole new narrative?
I'm just gonna be honestly and accept defeat to the fact that I don't have much clarity.
Yep.
It's too cloudy for me, man. It's too cloudy for me,
Yep.
and maybe that's gonna save me a little bit here. But for now, like, I'm not gonna be too strongly opinionated, because it can go either way. And if that shows in my trading, and if I get too strong with a bias and I'm disappointed, that can definitely hurt me. So the price, I'm just going to revert to the price action. And right now it seems like markets are trying to grasp onto the idea of risk on. But again, it's too early. Like, you leave the weekend, JD Vance leaves with no good news. He's basically like, yeah, we couldn't agree on anything.
Yep.
Right.
Yeah.
But then you have New York Times saying that there's going to be Iran's looking at the idea of no longer uranium enrichment, which is conflicting, right? So it's just so much back and forth, man. It's so much back and forth, and I think that, again, if you chase price with where it is right now, if let's say you're risk on, you can get badly hurt if you are disappointed, and I've definitely experienced that before. I've definitely had my strong opinions. I've definitely put on too much of a size, and I get burnt really bad. So I'm looking to avoid that and just wait for some kind of an obvious, decision either way.
Yep. And did you see the meme with JD Vance? Like, JD Vance visits the Pope dies. JD Vance visits Viktor Orban, Viktor then loses. So essentially, I wanted to talk about it. I think the euro caught a little bit of a bid because Orban lost the elections in Hungary, and the new government is supposed to be pro-Europe. So essentially, I think the euro did catch a bit of a bid. Let's check it out here. Well, it definitely filled the gap. and it keeps going higher, almost back to the previous highs from Friday. So that's good news. Maybe maybe a trade can be born out of the euro dollar. Any Forex pairs you're looking at? Are you mostly trying to stay flat this week?
I'm still in that Kiwi dollar short position. It's pretty much doing nothing. It was in drawdown on Friday, and then we opened Sunday or last night, and it was in profit, and now it's basically just back to almost break even. If I had to choose a side, I would say risk on. I think
Okay.
I think eventually we will be risk on. Like, I don't think this, eventually the markets are going to force a way or a scenario where that's the environment. So I'm definitely looking in that direction. But again, I have to be very picky and patient when it comes to when I decide to trade that direction. So I've been seeing the Aussie dollar basket getting bullish on the Edgefinder. Let me go ahead and show you real up here. Aussie Kiwi is getting a very bullish reading, and then you have Aussie CAD, Aussie Swiss getting bullish as well. So I do like that. Maybe I go back into the idea of going long the Aussie basket as a whole. But right now, like just looking at Aussie US dollar here, we kind of traded into this level here, and then we traded higher. So it seems like this is a very strong level that has proven itself as support. So, this level right here is that I'm talking about 0.6900. So I put an alert here. So if we can somehow get a pullback in there, there's a chance that I don't get that, which has happened to me many times. But if I have to choose, I want to say risk on some kind of a meaningful pullback on risk on currencies.
Interesting. To be honest, net, I'm starting to flip to risk on as well. I think overall the situation may not be improving as much as we would like, but the markets are definitely kind of going over the whole narrative and starting to ignore the negative aspects of the conflict in the Middle East. And like the best example is the stock market. And if you look at the dollar, so let's put the stock market just doing very, very well. Quick recovery there. The drop wasn't even that big. The drop from the March, let me see, 2nd of March to the bottom, like 7.3%. That's nothing.
Yeah, man. I think Marco, what it was that it was just a slow grind lower. That was really freaking people out. It wasn't like a August 5th sell-off where we had that deleverage event, or the April tariffs where you were having some big days at once. This was a more gradual decline there. So I think that's what made it more scary than what it really was. But like you said, 7%, that's nothing, man. So
that's small. And I just wanted to put the dollar in. So the dollar caught a massive bid when the conflict started, but pretty much the move is kind of done. We hit that resistance on the DXY, and looking at it, I don't see a lot of reasons why the DXY would want to climb up higher. I'm actually pretty flat on the dollar at the moment, pretty neutral, as I'm on most things. So let me ask you something. If you would have to pick an asset that has the most polarity, that like you have the highest conviction of it going up or down, which one would it be? I know for me, it would be the S&P pretty much. At the moment, I think the S&P is super strong. The bearish narrative is kind of done, and we have picked the direction to go up. But that's about it. In the Forex world, the volatility is really low, and the moves are pretty small as well.
Yeah, and Forex world is a little bit tricky, man, because I want to say that the path for the dollar, like if this continues, right, it seems like this 100.5 has been a good ceiling. And if it holds, then yeah, path of these resistance for the dollar is going to be lower, because I agree with Aussie dollar higher, things like that, right? So that's kind of my idea. Like I think 99.5 is a good ceiling there. If you somehow get the dollar index to fill this gap that we experienced over the this gap right here, then this is just a pullback into the trend to the to the downside there. But again, super tricky, man. Like when it comes to Forex world, I can't just make a decisive call at the moment. I'm going to stick with equities there. And I agree with you here that the path of least resistance for equities would probably be to the upside, just given the way it's digesting this whole potential ceasefire that we're experiencing.
Yep. And we have another bullish Monday. So I think every single Monday was bullish from when the conflict started on the 2nd of March. So we have just been seeing green candles. Let me check the latest candles. So if we flip to the S&P, which is definitely a tradable pattern, but looks like kind of the pullback from the war or the conflict is over. So yeah, I would say this Monday was break even, but Tuesday was bullish, and then you had the 6th of April, which was bullish, and then you have today gap fill, and so far a bullish Monday. So definite pattern there. I think we now have 7 or 8 Mondays as a sample size where the markets kind of gap lower and then fill. So gap lower and then fill all the way back up, and then some, which for scalpers or more short-term traders could be a great opportunity. I didn't look at gold, but let me put it up here. So gold seems to be, it's down on the day, of course, but seems to be filling that gap quite convincingly. Probably is going to go over above the 20 MA. Any opinion on gold, or similar to Forex right now?
Actually, I think gold can. I think at 4,400 an ounce, gold is very attractive, very, very, very attractive. Again, for that to play out, you would probably need to see a flare of risk on or risk off. The dollar gets higher, yields higher, and again, that kind of specific scenario doesn't really look to be as prevalent as it once was. So maybe this is a level here, a floor. Again, too early to call, but when it comes to yields, you are seeing that some yields are starting to come on the decline here. So you can see here the conflict started at this white line. Dollar index yields are coming here lower. Kiwi's actually still grinding higher there, but Aussie lower, Canada lower, and Eurozone somewhat lower here as well. So overall yields across the globe are starting to come down a little bit. Maybe that's a good catalyst for gold. I think on any meaningful pullback, you can see gold revive itself. But again, gold is one of those asset classes where it doesn't need a pullback. Like if it's ready to go, it's ready to go, which is the tricky part about that. So I do think that it's starting to look better because of the whole inflation and interest rate story is starting to die down a little bit. If I look at the asset scorecard on that one, I mean, it's neutral. So again, not like anything crazy to take action on. But again, maybe gold, maybe 2 months from now, is very much in play again.
Yeah. I mean, I'm just waiting for the confirmation from the Edgefinder, which it's still neutral. I didn't check it today, but I can do it right now. So let me open the Edgefinder here. Let's look at gold. It's probably going to be neutral still. I think we need zero. I think we need to see those US yields start to drop, and that definitely could flip the sort of the reading on gold there. One more thing that is on the radar for me is UJ. So UJ almost hit 160. It was pretty close. I would have probably sold if we hit 160, and I would have bet on another drop like the one on the 19th or the one on the 8th of April. What about you? Are you looking to get in if we hit 160? Of course, I don't think it's going to happen if...
Yeah, maybe intraday plays, because I do remember you were mentioning one day where essentially every time UJ gets to this level here, you just kind of fade that move. So like this is like a stealing. So like maybe you can get some quick intraday plays here. It's tricky because we don't know when the Bank of Japan is going to intervene. That's something that I'm experiencing now with Swiss yen there, so where you're kind of like, they're having some chit chatter. In fact, they had some last night, but again, nothing meaningful as far as a development for an intervention. But this seems to be like a pretty solid level here where you just kind of get up there and you just kind of trade lower. Here again, you just trade lower. Here again, you just trade lower. So we're here again. Are we going to trade lower? Maybe, maybe not. If you were to get a continuation in the whole ceasefire type situation, stuff like that, then dollar becomes softer. And of course, UJ comes in lower again. One thing I was noticing this morning before I came on the show, on the Edgefinder, I was looking at the Eco Surprise Index, and the Japan is actually creeping up here. It surpassed the US dollar very ever so slightly here, but it has made its way. You can see here that it's the second choice now on that leaderboard. And it was in orange. So you can see I'm going to go ahead and just isolate US and Japan there. Actually, I'm going to keep Aussie dollar as well because that's actually been very strong too. But here, I want to show you this. Japan in orange here was once the bottom out of these four, out of US, Euro, Japan, and Aussie.
Yeah,
it was at the bottom. It got weak, got weak, but now it's starting to make its way above here. Now it's at the top when you're comparing US, Euro, Japan, and Aussie. So I do like that going for it. I don't know why. So let me go ahead and verify the heat map. Let's see here. Growth looking strong. Growth as a whole is looking strong here. So manufacturing PMIs came in flat, but still above 50. Services PMI beat. Retail sales not so much, but you're seeing PPI recently ticked higher. And the unemployment rate came in lower. So yeah, you're seeing some better improvements when it comes to the overall economy in Japan. So I do think that it kind of like is in a good position where if they were to hike rates, they'd be able to absorb that and move on and continue to continue that upward trend as far as like economic prosperity goes. So we'll see. But again, when it comes to the timing of an intervention, maybe the best approach is going to be fading whenever you get up to these elevated levels. Maybe that's kind of the way you have to go about it.
Yeah, that's pretty much my game plan. Just if we hit 160, I go in with a sell, try to take some profits. If it's not a clear intervention, and if it's a clear intervention, then I'm just looking to sort of to ride it lower. And I know the 10-year is just creeping up higher. I think that's the next thing you were going to bring up.
Yeah, it's really up there now, getting close to 2.5. So definitely a bullish thing to see when it comes for the yen. It's just creeping up higher there. So I don't know. We'll see. Maybe that's the next thing that markets are moving towards is like an intervention. But again, that's very speculative because no one knows when it's going to happen. But if you were to see that happen, an intervention, that's definitely a ripple effect into all markets.
Yeah, I just like the sort of the carry trade falling apart, and the yields in the US were supposed to go down while Japan is climbing. So essentially the edge, the profit margin with the carry trade is lower and lower. So capital is flowing back into Japan, back into the yen, and back into the stock market, which is why I like the Nikkei so much, because of that story. So another reason for me like to so if we look at, for example, the real yield, I think the dollar one should keep on dropping while the Japanese one should keep rising higher.
You have Aussie and Japan up there. So yeah, that it has that going for it as well, which is really good to see. The thing is that this is a very established trend to the upside. Like this is this is a fan favorite across anyone that's looking to arbitrage or anyone that's like looking to participate in the carry trade. You're going against a very established trend, but there's no doubt that as the spread between the two central banks rates start to narrow, that this trend starts to weaken a little bit there. So again, it's just a timing thing on how you want to approach it. But I think there's opportunity there. It just needs to really develop itself.
I would agree. So anything else that changed for you this week? Anything fresh that you added on your watch list? For me, sort of the only thing was UJ because it's creeping up higher back to 160. So yeah, what about you?
Nothing much, man. I just when it comes to taking an optimistic approach to this market, is I want to be bullish risk on, is just waiting for a meaningful pullback. That way I'm not caught in any disappointment repricing, right? Like Aussie dollar looks really cool for me. I like it. I've been liking it for a long time. However, the price has just, ran up here. So if I just put a market order here because I'm thinking that's going to be risk on, and you get some kind of a repricing or disappointment, then I'm going to be in trouble. So I'm just going to be cautiously bullish, as Nick would say, and the rest of the members here would say, and wait for some kind of a meaningful pullback and just wait for that. But until then, really nothing much going on, man. It's going to be, for me, it's going to be quite boring, quite a little bit of nothing. So yeah, that's kind of my thought process.
Being flat at the moment is really not a bad position.
Right.
Yeah, I'm thinking of the same thing. Or if I want to jump in, just do small risk, just to satisfy the urge of being in the markets. As far as my positions go, I'm just going to post the link to the form. Let me just do that quickly. So if you guys want to participate in the DNA funded giveaway, fill out this form and you will get entered in the comment section. Just wanted to go through positions that I have. So I'm in oil, which was running some pretty decent profit because we gapped up. I'm in Swiss yen, which is probably going to hit the stop loss, but part of the game. And yeah, that's pretty much about it. I was looking at the Nikkei for a possible pullback, but with stocks absolutely rallying higher, looks like that's not going to happen. I'm not going to be the one to chase, but Nikkei just looks pretty amazing at the moment. So if we do get a pullback to that 20 MA, it's going to be the first thing that I look to buy.
Definitely, man. Japan, it looks really good on paper right now. We just got to let it unfold itself. I think, again, I think there's going to be a situation where when the move starts to happen in favor of Japan, whether it be the Nikkei high or the yen or whatever, I think there's going to be a lot of inflows for that. But yeah, until then, I'm going to be very patient, do with what I do, and just watch the markets as the cool thing is that when you're aware of the macro picture, you're aware of like what to trade, what not to trade, and that's all thanks to this good friend here, the Edgefinder. So before I go ahead and head out, Marco, and let you do your DNA funded giveaway here, I would highly suggest everyone get yourself a copy of this tool. It is 45% off right now, so definitely go ahead and take advantage of that. And as well, we do have the Telegram channel where you can see bonus content from this lovely gentleman here. You also have the discount code as well, polls, chart markups, all of it. And then you also do have the free Discord now that is now available to everyone. So definitely participate and get integrated into the community. I promise that you will love it. And Marco, I'll go ahead and leave you to it, man.
Sure. We shall see each other tomorrow, I believe. So let's see if we get some volatility. Let's see if we get some actual follow through from these moves. And
we'll see. We are seeing the dollar soft here today. It's getting increasingly softer. So maybe we're starting to see that unfold itself. But again,
hopefully,
man,
hopefully
we'll see.
Yeah.
Hopefully we can start trading, because I kind of don't like being flat. I mean, I have to protect myself. But again, we're traders. This is what we do. So we want to be involved. But
I know the urge is creeping up. The urge is starting to appear to just take positions and be in the markets.
All righty, man. Take it easy.
Yep. See you. Goodbye.
Bye-bye.
Let me post the link to the form one more time. So if you want to participate in the DNA funded giveaway, let's just copy this and paste. So fill out the form and you will get entered in. By the way, an update on my personal 25K two-phase funded account. I'm down. So I was up $200, I believe. I'm now down $250 because those gaps at the market open kind of crushed my positions. By the way, this account is purely traded by ChatGPT, if you're wondering. So yeah, the equity high was around 25,131, something like that. And now we're back below break even, but part of the game. I have a CAD yen buy, a sell on the S&P, a sell on gold euro. So CAD yen is doing well. Happy with CAD yen. Gold euro doing okay in the green. Anyway, if you want to get funded, definitely use the code A1Live to get 25% off any DNA funded challenge. So code A1Live gets you 25% off. I've had a great experience so far. There's a big broker behind this company, and they're using TradeLocker, which in my opinion is the best execution software out there. For example, when you're on challenge accounts, so when you're passing phase 1 and phase 2, you don't need to manually chase the take profit, but the trades automatically close when you hit the profit target, which is amazing. That's like no other platform that does that, because they don't want you essentially to pass. But here it's automatic. So yeah, check it out. Use the code. Comments. Let's take a look at any comments. I saw one interesting comment. Trump promised to start the blockade at 10 a.m. EST. What is the current EST time? Let's take a look. Okay, so it should have already started. I know we had the breaking news, the the latest one, essentially. Okay, so you have Trump. If any of Iranian ships come anywhere close to our blockade, they will be immediately eliminated. Iran's navy is laying at the bottom of the sea. Blah 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 blah. Yeah, okay. And then, but then you also had this: Iranian officials are studying abandoning uranium enrichment. So it's pretty tough. It's tough out there. Staying flat, as I mentioned, is not a bad position at the moment. Staying flat could actually save you a lot of percentage. So yeah, be careful out there. Super volatile. I am running my oil position because I do believe the strait will just remain closed. And the longer the Strait of Hormuz remains closed, the higher the price of oil should go. That's what most of the experts are saying. Okay, so let's now do the giveaway. Let me copy all of the entries. Today is the 13th of April. So let's go to the 13th. Okay, we have quite a lot of entries. Nice. Nice to see that. Let's copy that. And go to the wheel. Paste, spin. So let's see. We have Khalid or Arthur? Khalid B. Congrats on being the winner. It's going to be a 5K one-phase account. And after my segment ends, I will send you the link for the free challenge. Okay? And just to repeat myself, so code A1Live, A1Live gets you 25% off any DNA funded challenge if you want to get funded. I still have 3 more minutes of the segment, so I'm just going to run through the watch list. US oil, I have a position. I don't have a take profit, but my first zone would be this swing high. So taking profit around there would be perfect. Okay. Swiss yen is probably going to hit the stop loss or may have already hit the stop loss depending on your spreads. Not the greatest trade, but it was high probability when I took it, and I had a pretty good conviction on it. Edgefinder was bearish as well, so worth taking in my opinion. UJ, I'm looking to sell at 160, so let's put an alert at 160 like this. If we do go there, I'll probably execute a sell position. If you want to get all of my positions, by the way, you can join the A1 Discord below in the description of the stream and use the code Marco to get 25% off. So all of my trades, positions, market analysis, all of the insights you get there. Okay. Then I have, what do I have then? I have the JP225. So JP225, I'm looking to buy pullbacks. I think the Edgefinder is still bullish on this one. So let's take a look. Nikkei, bullish. So that is nice. I like the whole situation. You know, everything that I mentioned when Alan was on the stream still stands, or I've been talking about it for weeks now. So I've had a buy position. I got taken out of it because of the US and Iran conflict. I want to get back in. Absolutely. The reasons for taking this position are still the same. They are still valid. And gold, I'm considering buy setups on gold. So if I can get in on a nice buy setup on gold, that would be pretty high probability. Last thing I'm waiting for is a bullish reading on the Edgefinder. So that's kind of the final piece of the puzzle for me to buy gold. I think gold has been oversold. I think we bounced off the 200 EMA. I think there was a huge wick, or I'm seeing a huge wick. So I think it's time for us to go up. The path of least resistance, in my opinion, is to the upside. So that is about it. That's also the end of my segment. You can catch me this whole week. I'll be streaming every single day, and I'll be doing a giveaway, one giveaway per stream. Don't go anywhere because you have Tiger coming on right after me. So I wish you guys all the best. Hopefully the US and Iran situation does get resolved, no matter my positioning, because that would bring us back to risk on. It would, of course, mean peace, and it would mean going back to NFP, central banks, inflation prints, stuff that is more simple to forecast. So thank you for watching. See you in the next one. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here. Happy Monday to you. Hope you all had a wonderful weekend. I feel like I've been drinking out of a fire hose, doing more onboarding stuff with my company. And I tell you what, it's times like this, and especially for anybody having a job, it's times like this where it's so awesome to have an Edgefinder for when you're super busy, super swamped, doing your regular 9 to 5, as probably a lot of you have, most of you. Just to be able to take that quick glance at the Edgefinder, no matter how busy you get, to see what our top setups are, guys. This is what used to take me, I think I've mentioned it before, a couple hours or so easily every single day, just to kind of go through a lot of the indicators and fundamentals on here. So really, really is a time saver. If you guys have not gotten you an Edgefinder yet, highly encourage you to get one. Definitely hit up the team. So on that note, there is also the 35% off code for Ola Prime. If you guys want to check out a new firm, one that's more tailored towards swing trading, unlike a lot of the other ones out there, I think it's a really good one. So A1 Live is the code. You got your QR code on the screen there as well. So, well, I'm sure that the guys beat it to death already, but obviously going through the Vice President Vance went and cussed and discussed their deal with Iran. I think they spent like 21 hours negotiating, only to leave without a deal. So I don't think it was really that much of a surprise. As you guys know, Iran's kind of stubborn and hard-headed with trying to negotiate anything. So needless to say, yeah, they left the meeting out of Pakistan. And the only market open, obviously, over the weekend is Bitcoin and crypto. So when that did get announced on the news, we saw this big, lovely, or ugly, however you want to call it, red candle here. Would have been about 10 p.m., I think, 8 p.m. my time, Central Time, so 9 p.m. Eastern Time. But we saw this big ugly candle, and I got to say, I was keeping an eye on this zone structure underneath because we kind of had, what did I draw up? I think it was a 30-minute zone. Yeah, I was keeping an eye on this 30-minute zone over here as that news cycle kind of pushed price further down. Beautiful 30-minute candle with a big, series of green candles going up that kind of broke these structures along the way over here to the left. And then eventually it did wick through this double top or more major swing high point. I was kind of keeping my eyes on it. Did it right here. Didn't really close. So that was kind of a -1 in the back of my head that it didn't close up here. But also you see that blue line. So we got a former resistance over here that kind of became support. So that was another odds enhancer in my favor as far as looking at this particular zone. But as price finally came down, and yesterday morning as I was waking up, I did see that it had bounced into the zone. So, I at the end of the day, I didn't want to pull the trigger on it just because I wanted to see how the market opened today, the actual cash market, because I just wasn't really a huge fan of this volume spread analysis activity. Yes, you see some red candles and yellow candles, but if you look at this and kind of compare it to the last period of New York market open, okay, that's nothing compared to the activity we had back over here. So, I know I tell you guys that I like to look for red and yellow candles, but when they're that short, it might as well be green or blue to me, below average, trading activities. So I basically ignored it. Yeah, we did kind of get a bounce off. It kind of started bouncing back into this congestion after that initial drop from the failed summit, and then just got another big red candle down with more volume. So when I saw that red candle, I stayed the heck out of it, because we kept getting a series of lower lows, lower highs. And then what happens? We come into the kind of the middle part or latter part, if you will, of London. And then New York opens up, and what do? We get a big push up. So in hindsight, yes, this zone kind of did work, but I stuck to my guns because, I kind of drew this green line up. If I were to have gotten into this trade, I would have wanted to see this price action. Okay. I want to see a price bounce off of a zone I'm looking at and not dilly-dally around and go sideways for 22 or 23 hours, whatever it was. I want to see that immediate push, and I just didn't really see that. And I did, and really the thing again that kept me out was the fact that the volume spread analysis activity was so low. So I obeyed my rules. I didn't jump the gun, but as you can see, New York had other ideas. So there we go, off to the races. Okay, we had obviously a risk-off tone from the failed deal. And then we had President Trump obviously bring up the blockade of Hormuz. So just more risk offness, if you will. So I just didn't feel like hopping into Bitcoin despite the +5 score that I do believe we're still getting over here on the Edgefinder. Okay, so it's actually fallen off. So there you go. So it's actually fallen off the list. So yeah, in hindsight, the demand zone worked, but I just didn't have enough odds enhancers in my favor for me to feel comfortable trading it, if that makes sense. So hey, it is what it is, but it just goes to show the power of these supply and demand zones, even when things aren't 100% in your favor. So that was kind of my look on Bitcoin. And and as always, guys, let me know if you have any specific tickers you'd like me to check out. We can definitely take a look at some technicals for you. Just kind of going back over here to the Edgefinder. I actually had a few of these zones get hit upon the Sunday market open. So I thought I'd have a quick look at a couple of these over here and see what we had. So the Nikkei, okay, that was giving us a bullish signal, and it still is a +7 over here. So this is another one where we had gapped all the way down into some zones of demand over here. I think that was a 4-hour chart. Yeah. So taking a look at this green candle right here, okay, I was kind of looking at this. I wanted to buy here, but the problem was we bounced into an overhead supply zone. Okay, talking about this daily chart or this daily zone from that kind of started back here on March the 2nd. Okay, You had a kind of a fat doji candle with a gap down. And I just, that was kind of the initial thought of hesitancy right there. Because if we scale out to this daily chart like we're on now, where's my zone at? Is it high? Is it in the middle, or is it low on the curve? Well, it really just depends on where you draw it. I mean, if we go to the extreme bottom down here, okay, then we're clearly high on the curve. Even if we wanted to bring it a little closer to here, okay, it's still high on the curve. So to me, that was too pricey, number one. But number two, we bounced into this resistance, this overhead supply. So that kept me out of it. And again, the zone may work out after all, but c'est la vie as far as I'm concerned, because who knows how much follow through we could have had with this risk off reaction to the not only, the Vance leaving without a deal, but the blockade from President Trump and the U.S. Navy. So just didn't feel too great about it. But, again, the zone seems to be wanting to work out after all. So there you go. What we got, Tony? Euro yen breaking that resistance, still holding longs. Let's go have a look at that. And Euro yen, I do believe, is off our list. Okay, Euro yen, Euro. Let's get over here. Let's go have a look. Let's have a look. See what you're looking at. Okay, so yeah, you had your gap down. We broke the supply. Yeah, there you go. Broke all this nonsense over here. Did we break this structure over here to the left? Looks like we did, right? Yep. Kind of wicking through it as we speak. So if I, like me, I'm not in it, but let's just say we had a bullish signal on the Edgefinder, I would probably be more interested in, since we have broken this structure, I would want to be looking for a break retest, something like this, come down here for a buy like this. Do I have any zones up here though? That's the question. 4-hour chart, I don't really like any of this, not yet. Because you could almost look at this doji candle here as a consolidation, but the problem is, if I zoom in to where you guys can see this a little easier, okay, we do have a nice doji, but the problem is we don't have a gap. So the top of the wick, if we skip our leg out, it's touching this wick over here. So to me, I would look at that as an efficient market. So I wouldn't on a 4-hour chart be able to be interested in this as a potential demand zone. Even if we get this price movement like I kind of, theorized, if you will, and then a return, I just wouldn't like it because there's no inefficiency. So if you're in the trade, great. Make that money because we've got some strength in here somewhere because it's broken supply. So if we step all the way back to, let's see, like a daily chart, well, you've pretty much got a new impulse leg. I just kind of draw that out. Swing low, swing high has broken through structure. And it's trying to decide if it wants to close above this structure. But I would go ahead and use this as a impulse leg. Okay. All these candles together makes an impulse leg because it's already broken and closed above this major, what I was looking at as a major supply, major swing high. So there you go. You've got some strength going. Stay in that sucker. Milk it for all it wants to give you. I like it. But as far as, second chances and that kind of thing, I mean, if we wanted to squint our eyes, we could look on a daily chart of this red candle as a possible daily demand zone. Because at the end of the day, let me just get this nonsense out of the way since we know that's old news at this point. It's given us a little bit of a daily gap from here to here. Okay, so that's the inefficiency I'm talking about. This is how I look at runaway gaps, acceleration gaps, or fair value gaps, as is commonly said in trading. Okay, I want to see the gap, but not trade from it. I want to buy the unfilled orders. I want to place my order in the unfilled orders from below. So going down to a 4-hour, let's see, do we have anything of note here? Not really. It's pretty weak volume spread analysis activities. So I just wouldn't be a fan of really any of this, to be honest. I don't see a great zone. And when that price did break, it just didn't really have that much oomph. I like to see oomph, ladies and gents. I'm not seeing that. So Probably better things out there to trade. Well, clearly, because it's not even on our list yet. Yeah, guys, like Nick posted there, find me on @TradeLikeATiger on all my socials. I'm trying to get back into my own personal stuff, guys. I've been so fixated on my new position with FX Empire that by the time my day ends, I am wiped, and I've been failing on putting up my shorts and things. So I did finally get a weekend video pasted yesterday. I finally made some time to do it. So at some point when I'm done with all this onboarding, I'll have much more time on my hands. I learned another big scoop of stuff today to share things on multiple socials for the company, and they use something called Vista Social. I don't know if you guys have ever heard of it, but it allows you to kind of send posts to multiple things at once. So that's already going to be a huge time saver. I can't wait to get practiced up on it. But yeah, just bear with me for a few days. I may miss a day or two here and there just for the onboarding reasons, but it'll all be over soon. Let's see what else we got, ladies and gents. I want to take go ahead and let me know, guys, if you have any other items you'd like me to look at. I'll just take a look at a couple of these other things I was looking at. So we had a couple. These were my alerts that hit whenever the market opened. Of course, like I said, we got that risk off gap on pretty much everything. Well, actually, we can just take a quick look at that. Just looking at kind of your broad market drivers, okay, the VIX, the volatility index, go to a 1 hour. You can see that we gapped up on this thing, but it's kind of retracing. And I think a lot of these have been retracing. Let's look at the Dixie. Okay, strong gap up. Remember, the dollar is safe haven currency, and it gets a lot of inflows for uncertainty. And whenever the deal didn't get finished with Vice President Vance, as well as the blockade, it kind of pushed up, but it's retraced. So these gaps, these risk-off gaps have been kind of closing. Okay, VIX, Dixie. Looking at your 10-year yields, gapped up as well. We've closed that gap. Oil, crude, WTI and Brent, we had the gaps up. Now, those have pretty much maintained their pushes so far as oil goes, and it makes sense, especially with, like Marco said earlier, the 10 a.m. was it 10 a.m. Eastern when this blockade started. So definitely going to maintain some uncertainty because of that. Nat gas, I look at this for my other company, gap up, but it's closed. And then looking in gold and silver, obviously it had a little bit of the opposite. Not on my watch list, gold or silver. Okay, it's still pretty well neutral to very, very slightly bearish, if I remember right, on the Edgefinder. But obviously neutral, and that's the important thing. Just not enough odds enhancers in our favor to go out and try short or long in this thing. But gold gapped down right into a zone of demand. And what did it do? It's getting a reaction. Okay? Like I say, just because it's, I always expect a bounce or a retracement of some type when it hits my zones. I'm not saying it'll follow through and just keep going up, but I always expect at least a bounce like this, even if it does roll back over, guys, and shoot through the rest of it. So, but yeah, we're getting a bounce there. We're getting a bounce. A silver didn't quite make it down to the same zone, but same thing, gap down, and then just, slowly trying to close the gap. Bitcoin, we went over, and then let's get back over to the indices real quick. Gaps down, close the gap on S&P, same thing with NASI, and almost the same thing with Dow. So that's kind of where we stand, risk off reaction, but a lot of these gaps are trying to close to get back to where we were at Friday at the end of the intraday session. Can you check Brent, please, says Rizvan Drumsy. Yeah, let's do that. Let's have a look at the Earl. And by the way, I spent probably 2 or 3 hours on Saturday just studying oil, guys. My previous company, we affectionately called oil the problem child, because we would I was on stream with 3 different guys, and we all 3 had our own different ways of trading. I trade supply demand. They one of them did a lot of pitchforks and kind of forecasted price with pitchforks, and another guy used a series of indicators. I mean, it just looks like spaghetti the way he trades. But all 3 of us seemed to had trouble with oil and trading oil. It just didn't seem like it was wanting to obey any of our trading rules. So I finally learned that it's a lot more well, it's obviously supply and demand, but the news has a lot more to do with it. So I don't know. I'm getting better at oil with supply and demand. It's just like anything. You have to learn the nuances of, especially if you're a beginner, right? Pick one or two currency pairs if you're an FX trader and learn all the nuances before you go trading all 28 of them, right? 28 of all the combinations of the 8 majors. So for me, oil was always that one asset, and nat gas, which I'm kind of in the middle of learning now with my new company. But oil, I had more losses on oil is what I'm trying to say. So starting to figure it out, starting to close that gap. But hey, I've been in this thing 12 years. And just because I've been trading 12 years doesn't mean I have everything figured out. And I think anybody worth their weight in gold, as far as somebody that's teaching, will tell you that. And we don't know everything, okay? And we still get trades wrong. So anyway, I spent about 2-3 hours studying oil and all the different sites. Guys, they have something in Cushing, Oklahoma, where this older guy goes out and puts a drone up in the air and actually records the levels of the oil drums themselves. And I guess you can see kind of the supply and demand from that. Stuff like that I had no clue of and didn't know. So it's pretty fascinating to learn. But anyway, let me get back to what I was. But anyway, you were asking about Brent crude. I get off tangents, guys, sometimes. So apologize for that. Brent crude. Let's do this. I want to get my 2 layout system up over here. Okay, on the right side is my daily big push up consolidation over the last couple of weeks. We kind of broke out of that consolidation a few days ago, and then now we're kind of back to the middle. So to me, this is diddle in the middle territory, I got to say. It's just one big sideways congestion from about $112 down to 96. So, sideways trend traders probably enjoying this, okay? Trading the tops and the bottoms of this. I personally don't really trade a whole lot of sideways stuff like this. I prefer higher highs and higher lows. But that's just kind of the reality of where Brent crude is right now. For me to get excited about Brent, which I would basically, let me just go back to my one chart view. I would basically want to see kind of a breakout of all this. Just get me above all that right there. You got a bunch of double, triple, quadruple tops, however you want to classify that. And kind of like I showed earlier for whatever asset I was looking at a minute ago, give me a break, retrace, something like that. If we can get a push through that like this, break this structure over here and close, then I would look at this at that point as, a new impulse leg. And the impulse legs, remember, are where I look for my supply and demand zones. So, that's what I would have to see. And if we had a really strong green candle from where we're at now, well, you never know. This right here could be the potential start of it, right? But it's too premature to be drawing this up as far as the demand zone goes. But I would, if I wanted to buy Brent, I'd be waiting for kind of this action here. Give me a push up, break all the structures, preferably show me a close and not just a wick through and rejection before buying. Now, people will be buying just on the touch of this trend line, and that's predictable. So keep that in mind. Okay. Most people do the same thing in trading. If you're a breakout trader, if you're a break-in retest trader, the banks know that. So that's why I kind of singled out this particular spot. I wouldn't necessarily want to buy here, assuming I had a good demand zone right here. I would prefer my zone to be a little deeper. That way, when these people buy on this retest, well, we know they're going to put their stop losses here, and the banks do too. So what are the banks going to do? Well, they're going to sweep that. So all I'm asking them to do is sweep a little deeper into the demand zone itself, which again hasn't formed yet, but let's just pretend it did. Okay, that would be my play right there. This is why I say, goal number one is buy low, sell high. We've all heard that. It was like the first thing we learned trading 101. I don't think people buy low enough or sell high enough because, again, it's predictable. Liquidity is predictable. So where a lot of people are buying the retest, I'm a cheap ass and I want to buy a little cheaper. Okay, I want to wait for a nice demand zone. So that's what I would look at for Brent. There's no play for me right now because it's all sideways and congested. So hopefully that helps you there, Riz Van Drumsey. Bernard, Tiger, can you look at Kiwi yen? Seems like it's overbought. Let's go have a look at that for you. Let's take a look. Kiwi yen. Yep. Okay, so we busted through an overhead supply, which had a ton of candles to the left, so it's really not that big of a surprise. Let me go to my two. Okay, so we have our 8 above our 21 EMA on a daily. We've also broken through this overhead supply that I had mapped out over here. What do we got on Edgefinder on this thing? Kiwi yen. I don't know that we have it. It was on the list, I think, last week at one point, wasn't it? Kiwi yen, Kiwi yen. Where's this thing at? Oh, okay, so it's a -4. So we'd be wanting to sell this. So right away, it's off limits for me just because the 8 is above the 21 and we've pushed through this overhead supply. So the way I see this is we have an impulse leg that goes all the way up here. Okay. So that to me is kind of the strong leg to watch. And when I say leg, just know that means a multiple candles. It's not just one candle. It's a series of candles. So to me, that looks like strength upwards. And then again, the 8 is above the 21 and it's broken. So I would need to see a series, assuming this was bearish, which it's not, it's -4. So it's just 1 point away from it. I would need to see a series of lower lows and lower highs over here, guys. If I'm looking at my 4-hour chart, okay, I would have to see a break of this structure here and preferably another, like a series of at least 2. Okay, break that structure again and then look for a supply zone somewhere in this area. That's kind of the way I would look at it. I just don't think there's anything to do with the trend being up over the last week and a half or so. But theoretically, I would want to see a supply zone created like that. And that's a conservative way of doing it. Now, a very aggressive way of doing this is if you get a break of this leg and then you just try to find a zone right here on this leg instead. Because this is by definition an impulse leg down. It broke a structure. Now there was no there was almost no it wasn't very active. There wasn't a whole lot of volume. Okay. So that would be the hang up. Volume spread analysis. See that candle? That's tiny. This is our gap candle, our gap down. So it closed the gap pretty strong. So that's why I would not be interested in just seeing a break and then retest and find a zone immediately. I would want to see it do it a second time like that. So that's kind of the projection I would, put out there. Hopefully that makes sense. I just like we don't want to be trying to catch falling knives, we also don't want to be trying to stop a rocket ship going upwards. So hopefully that helps you out on that. As far as the top setups, my goodness, my time flies by. I think we still had Kiwi dollar at the bottom. I did want to take a quick look at that with you guys for a moment. Kiwi dollar shorts. So on Kiwi dollar, I do still have a series of zones up here that, remember, and I mentioned this last week, we have a 4-hour zone in here that has already been mitigated. It's already been touched. Now, when I was taught supply and demand, I was actually taught that as long as it doesn't pierce through 50% of the zone, it is still good to trade. It's not great, but it's good. I almost never do that anyway. I don't want to trade a zone even if it's just barely been touched like this. That's just me being extra careful. So for me, just as a reminder, inside of that 4-hour, and this is how intricate things can get sometimes. Okay, if I zoom into this 4-hour, which is the red, well, we have a 1-hour. So that's what this white line is. So now what I'm doing is waiting for price to not only touch the 1-hour, but I want it to come in a little deeper to actually touch the daily, which is the yellow. Okay. I'm really waiting on the daily to get touched, which I would look at as this red candle here. Gap out, broke structures and closed. Okay. And then you had another, series of lower highs, lower lows. So I'm waiting for it to come up. The other thing I like about this is, remember, we do have some liquidity up here. Okay. There is definitely going to be some buy side liquidity here because of the short sellers that were able to push price down. So if we get price to push in, and oh, by the way, we have yet another potential liquidity grab from these shorts that are pushing price down. So let's collect this liquidity sweep here, liquidity sweep here, and then we bounce into the zone of unfilled orders. I think that might make us a pretty decent opportunity to short. Not financial advice, as we always disclaim to you guys, but that is exactly where I'm keeping my eyes on. Now, I went ahead and put my alert at the proximal line of the 4-hour zone still, but I'm waiting on price to enter and touch the daily for a possible short at that point. So do what you want, but that's a zone of interest for me. And ladies and gents, my goodness, the time has already came and went. So with that, I'm going to hop up out of here. Hope you guys have a wonderful day. Just be careful. The blockade has started, and we don't know if there's going to be any bombs flying or not. President Trump has threatened it. So what does that do? It just adds more uneasiness. It adds more uncertainty. And yeah, that's kind of where we're at. We'll see if gold and silver can, get a bounce off of that. But I'm going to get out of here. Have a wonderful day, guys. Talk to you. Tomorrow's Tuesday. I'll talk to you tomorrow. Have a good one.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.